I'm Allison Ogle. I am from Lincoln County, Tennessee. I sell crop insurance for American Farm Bureau. I handle Middle and East Tennessee and Northern Alabama. And Ernie Driffen is with us today. He's our West Tennessee agent. He lives in Tipton County. So if he's in your area, he would be handling that for you. Okay, we're going to kind of skip through this really quickly too. This is just kind of telling you how dairy revenue came about. Obviously, it was important that we figure out a risk management tool for dairy, and Dr. John Newton had an idea, and it became dairy revenue. So what is dairy revenue? It's available in all the states right now. It is an area-based revenue product designed to protect the revenue of milk production on a dairy operation, and it insures against unexpected declines in the quarterly revenue from milk sales and yields for the pooled production region. So this is based off of the CME, Chicago Mercantile Exchange, and Chicago Board of Trade. This is showing you your coverage level. You can go all the way up to 95%, and it shows the subsidy on that. Yeah, kind of thought you should have my packet in your folder, but it's so dark in here, you probably can't read it anyway. But if you want to take a few notes, you can. So there's two things that you can take. So two endorsements. You can do class pricing option, which is a mix of class 3 and 4 milk, and then the components pricing option, which is the butterfat, protein, and other solids. So you can purchase coverage up to 5 quarters out. So first we're going to talk about the class pricing option. This is the class 3 and class 4 milk is what we would do this insurance for. And this kind of tells you a little bit about what we're going to see how it works. So this is an example of course, the government's been shut down. I can't give y'all like accurate quotes today. But this is based off, you kind of rewind back to the first quarter that we did, October, November, December. So this is showing, let me get my little laser up. This right here is showing prices. This is what the average was for October, November, and December, and this was for class 3. Over here is class 4, and there's the averages right there for that. So let me just tell you kind of how you do this. So if you want to insure class 3 milk, you can do it at 100%, and if you don't really care about class 4, you don't like that price, you can do it at 0%. So this number right here reflects the average of these numbers here, what they set at. Let's skip over here. Same way here, if you want to insure class 4 for 100% and class 3 for 0%, then you can do that. Here's the average here. And then if you want to do 50-50, which is what I've seen a lot of people kind of do it even, then this is an average of these two numbers here, and you can do 50% class 3, 50% class 4. Hang with me, this will make more sense. Okay, so then you have to decide some things you got to know. Your declared covered milk production for the upcoming quarter, the mix that you want to do, what we just talked about in the past slide, and your coverage level, your protection factor. You can do it at 100%, or you have the option to go up to 1.5, which would increase your liability on it, and then the share of the operation. Let me follow wrong with you. Okay. Here, so now we're going to talk about the component. This is the second option that you can do. You know, at first, I didn't really think that any of the farmers in Tennessee would probably be worried about this, but the more I've got to look at it, this is probably something that you want to look at as well. See what the prices are and compare it. So component pricing has to go off of your butterfat and your protein test. I know that this shows like on the number of your report that you get. So you should know this, but it might not be important to you. But either way, you can still insure these numbers. So right now, like Tennessee in our area, butterfat's running between 3.4 and 3.8%, and protein's about 3. And so you would have to tell me those numbers to get that. And this will make a little bit more sense here in just a second too. So then you've got to know how much milk that you're making. So for that quarter that you're insuring. So the next quarter that we're able to insure, we're already in January. So the next sales are April, May, and June. So you would have to tell me how much milk are you expected to make for April, May, and June. And we go off of those numbers. And same way with the fat and protein, we kind of look at what you've done previously and then kind of look at that. And that's where we get our numbers from. You don't want to over-insure. You don't want to under-insure. You want to get your numbers pretty accurate. Okay, here is just an example. They're showing you if the butterfat price was at $2.50, protein price is $1.75. This is a fix that will be there. So they're saying minimum 3.5, high, and then your max. Here, this is telling you where so like this is what the price would be on the board that you would be insured at. So on the next slide, it shows this a little bit better. Here, so same way they're saying these are the prices. We'll say that your butterfat is running about 3.85. Your protein is running about 3. Then this calculates the price for you. So that would be your insurance price. And then, so that would be like a guaranteed price. And so I know like a farmer earlier today told me, you know, he's getting like $18, you know, for his milk. Well, this is just set up for you. We want, you know, we don't want you to drop below. So this is like supposed to protect you for decline of price. So you can't really look at what you're making or whatever. You just got to look at it as, you know, this will protect me if prices were to drop drastically. So this is telling you the limits. You got to, like I told you, you don't want to over-insure or under-insure. You need to get it kind of right because they will penalize you if you try to over-insure. Same type of thing. This is telling you, you know, I was saying like kind of what Tennessee is running at. Uh-oh, what'd I do? Okay. Let me catch up with you. So, okay, here's our first example. So let's just say that your protein, did I already do one? Okay, let's do that. This is talking about the butterfly. Here's an example. If your butterfat test is 5 pounds, your average of butterfat test during the quarter must be equal or exceed 4.5 pounds to fall in that range that they want you to fall in. But let's say your actual butterfat test is 3.8. They would divide, you have to fall within 90%. And then this shows that you actually fell below where they need you to fall. So then you would be penalized. So you don't want to do that. The next example is showing you a good example. Let's say your protein test is 4 pounds. 90% of that is 3.6. So you need it to fall somewhere in there. Your final protein test fell at 3.8, which is fine. No revision declared there. So you'd be good. So that's just showing you examples of how you want to kind of fall into that 90% range. This is just telling you other, you know, selection. We got to do the coverage level, kind of the same thing. At the class pricing, you got to do your protection factor and the share that you have in the operation. Here is showing you purchase availability. So I said you can purchase up to 5 quarters out. So this is showing you, if you in the green, kind of what's available. So you can kind of look, we're in January and March right now. So if you look ahead, it's showing you what you're able to purchase right now. So if you guys are interested in getting a policy right now, then we would be looking, like I said, you have until March 15th to sign up for the April, May, and June endorsement, and you can't, or quarter, and you can get an endorsement going then. So this kind of just shows you how that works. And same way with here, just a little bit better. Shows you the quarter that we're in right here, the next quarter available. So if you decided to take coverage for it right now, it would begin on April 1st. It would end on June 30th. this is showing you when you would be billed for that. So if you take it for April through June, then they would start billing you July 25th, 2019 for the coverage that you took on this next quarter. Sales are available each day unless the government shut down. Prices and rates are validated by the Risk Management Agency, RMA. They begin at 3 p.m. Eastern time, and they're available all the way until 10 a.m. the next day. Sales suspension, that's kind of what we're under right now. Different things can cause this to happen, and there will be no sales. So calculating the loss, you know, your agent will kind of take care of this, but this is just kind of showing you what, you know, kind of how it works. Basically, when we run you a quote, you're going to have whatever you decide to go with, you're going to have your guarantee at that point. So then when your production comes in at the end of the quarter, we will do averages. We'll see if your guarantee falls below what you originally had insured is basically what it is. And you don't get insurance for death of cattle, other loss, or destruction of your dairy cattle. So acceptable records, if you were to have a claim or something, they may want to go ahead and see your milk marketing records, things like that. And, you know, from what I can tell that I've met with, most farmers already have all that. They've got all their stuff together, so that shouldn't be a problem. Same way here, verifying the producer records. They want you, you need to make sure that the actual delivered production was equal to or greater than 85% of the declared milk production for all quarterly coverage endorsements. So it's showing you kind of down here how that works. And like I said, that would all come into play if you had a claim. So now we're kind of through the question part. There's a lot of frequently asked questions. Maybe one of these are one that you have right now and we can answer it. What is the yield adjustment factor? It is the actual yield per cow per quarter divided by the expected yield per cow per quarter. So down here it shows you an example. Let's say that your expected yield is 6,500, but your actual is 6,425. Then they would divide that out, and then you would get your revenue. So you want your expected to be at least, you want it to be higher in order not to have a loss. But what's it saying? Of course, if it's below the expected, then obviously you're probably going to have a claim and your indemnity will be larger. If it's above expected, your indemnity will be smaller, and hopefully you made some money. Can I insure both the component pricing option and the class pricing option at the same time? Yes, you may do this, but you cannot cover the same milk. So example 2 is you can also spread out all your milk. Let's say that you plan to make, you know, 3 million pounds of milk within the next quarter. So you don't have to insure all that milk if you don't want to. You can spread it out. You can just do 1 million pounds. And then, you know, a little while later, you can, in that same endorsement quarter over April, May, June, you can do another 1 million pounds like later on and do a different coverage level. And then a little bit later, you can, you know, within that, you can do your other 1 million pounds, but you do not have to insure all your milk. You can do a little or a lot or whatever. So it gives you the flexibility to have control of your milk. Is there any limit to the size of dairy that can be insured under dairy revenue? No, right now there's no limits. Can multiple quarterly coverage endorsements be purchased for the same quarterly insurance period? Yes, kind of same thing we just talked about. You just cannot insure the same milk. Yes, you can I participate in Farm Service Agency's margin protection program and dairy revenue? Yes, you can participate in both programs at the same time. Can I participate in the livestock gross margin for dairy, LGM dairy program and dairy revenue? Yes, you can have both policies in effect, but just not endorsements on the same milk. So the national adoption here, so as of January 22nd, There are 1,692 policies nationwide. So policies, let me clarify that. So like I can sign you up for a policy today, but it doesn't attach to anything until you actually choose an endorsement. So most of my dairy farmers, I went ahead and encouraged them, let's go ahead and get you a policy ready. So if you decide to attach an endorsement to it, then you'll be good to go. So the endorsements so 7 policies were signed up in Tennessee. I know 3 of those for sure are in this room right now. Endorsements, there were 2274, and in Tennessee, 4 endorsements have been taken. And this shows you the milk protected, and in Tennessee, same way with the gross premium. So Tennessee needs to step it up a little bit. I think everyone's a little afraid of this. They don't really know how it's going to work, and we still can't really answer that question until the end of this quarter, because that's what everyone was insuring, January, February, March. So at the end of the March quarter, I think then farmers are going to be like, okay, how did this work? You know, what were you seeing? So I think everyone's just kind of a little standoffish, not for sure if they should invest in this or not. This is showing you nationwide. So active policies are blue, which mean you could just have a policy, but you haven't taken an endorsement yet. And the yellow are policies with endorsements. You can see the ones here in Tennessee. Here it's showing the state level pounds of milk covered in the top 5 states that are covered, just for your information. What happens if a dairy does not meet the 85% milk production rule? I feel like we've talked about this already, but we'll address it again. Milk is reduced and premium is not adjusted. This is a back check to make sure the dairy is not over-insuring. You just don't want to over-insure. Like I said, we're trying to get it as close as possible. Can I have a different coverage level and protection factor for each quarterly coverage endorsement purchase? Yes, I feel like we talked about that too. Like I said, you can spread out your milk. You don't have to insure all your milk under one endorsement. You can spread it out and different things like that and do different coverage levels. How do you buy it? Like I said, you can sign up with me today. I'll come out and meet with you if you're interested. Everyone should have got a crop forum with my business card on it. The crop forum is from the fall, so it's just got some facts and dates on there. But if you did not get one, I have more supplies over here on the table. I have pens and notepads that you're free to take, more crop forums. And I also left some brochures on our pasture land forage insurance, PRF. I think probably y'all have been hearing about that. It's fairly new, but not as new as this. But we sell all types of crop insurance, like I said. So if you have row crops or other things that you're interested in, please call me. I would love to come out to your operation and give you a quote. I think that's it. It is. Do I have any questions?